Hey fellow investors and fellow stock guardians. It's Thursday, January 7th, 2021. I'm Hoda, co-founder and CEO of StockGuard, and here's a recap of today's noteworthy movements in the market. The market indices moved bullishly. The Nasdaq ended the day more than 2% higher than where it started, and the other two indices followed suit. The presidential election result got a seal of approval from Congress despite the turmoil from yesterday. Moreover, the number of new jobless claims dropped unexpectedly. The lower number of new jobless claims is good news, but economists associate the drop to seasonality adjustment methodology. In reality, the unadjusted number of new claims jumped up. As we all know, the truth is that the economy is still hurting due to the impact of pandemic. Most likely, just like me, you are tired of looking at Tesla's chart and scratch your head that how financial analysts one by one give up on their bearish ratings and upgrade the stock unanimously. As long as Elon Musk can raise cheap money, the stock seems to be rocketing upward. For the sake of our mutual sanity, let's talk about another stock for a while. Shares of Teladoc were up by more than 12% on Thursday. The platform that allows patients to connect with their medical care team over the phone or a video call got an upgrade from financial analysts who believe the company is ahead of its competitors and would benefit from digital healthcare prioritization by healthcare plan providers. By the way, a StockGuard partner, Ben Alemo, has covered this stock in details in his recent video. I have a link in the description to that video analysis if you haven't checked it out yet. Today it was very challenging to find a stock worthy of our attention that ended Thursday in the red. Wall Street was quite jolly today. I did my best to find a red stock by screening the US listed universe of stocks for high growth potential, strong operations, no cash concerns, and negative sentiment. The result was an interesting list of stocks worth paying attention to, but none ended Thursday in the red. Talking about an overexcited market. In my second attempt to find a red stock worthy of our attention, I took a look at the list of all losers and removed over-the-counter and penny stocks. In the end, the stock that caught my eyes was Conagra Brands. Shares of Conagra Brands were down by more than 3.5% on Thursday. Several of the food brands you and I purchase from our grocery stores are owned by this company, including my personal source of guilty pleasure, Ready whipped cream. Forget about that, but this company has solid operations and an undervalued stock price. It announced its latest quarterly earnings report on Thursday. The company's solid quarter, however, the impact of the COVID-19 pandemic on its B2B sales to restaurants and food service businesses is dragging its future outlook down. Assuming that you agree at some point in the future the pandemic will be behind us and considering Conagra's solid business and more than 2% dividend yield, this is a stock you may want to consider for a dividend-focused portfolio. For the fourth addition to the 2021 Watchlist, let's talk about Novartis. The company is among the largest pharmaceutical companies in the world. It has a robust portfolio of approved and developing drugs, and you can buy this cash-rich stock at a fair price now. There's so much talk about several new trends shaping the future of medicine. Novartis is one of the unique companies that have invested across all such new innovative technologies and trends, from cell-based medicine to gene therapy and oncology. I know we all want to buy Bitcoin and call it a day, but do yourself a favor and have a look at Novartis the next time you're researching stocks. I know I would. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. I'll see you tomorrow.